Hello, guys. Give me a moment to make sure everything's good. The chat box is out of the way. Okay, cool. Hey, everyone. Welcome to today's webinar brought to you by Vantage. I'm really excited to have all of you here in this session. This is going to be a support and resistance masterclass, okay? Okay, thanks for interacting. Okay, so once again, welcome. We're gonna spend the next hour today. By the end of this session, I hope you have a deeper understanding of support and resistance. I know it's a very simple topic. Honestly, like I learned support and resistance ages ago, years and years ago. And there was this one time I was scrolling on YouTube and there was a video that says support and resistance video, and I was just like, oh, I don't really need to watch this video because I already know about support and resistance. So the thing is, I ended up clicking into that video anyways, and then I learned a different perspective on support and resistance. So even if you already know today's topic, maybe whatever I share with you might help you see it from a different perspective and help you understand it in a way that you didn't used to. Okay, so this is the foundation of technical analysis. It's very basic, but if you don't master support and resistance, I can assure you, if you are a technical analyst, right, it's going to be very hard for you to get profits from the market if you don't want to master support and resistance. So before we dive into the agenda, let's just make sure everyone is settled in. Audio, again, is working. Everything's working. You have your notebooks ready to jot down some ideas, and this session will be packed with insights. So I can recommend you to take notes if you can, and ask questions as you go. Okay? Hi, everyone. Welcome. It's good seeing you guys here. I really appreciate you guys taking the time to join. Okay, so before we go into the main content, you know how this works. We have to go through the disclaimer. I know some of you have been to these webinars before and you're familiar with this part, but I just want to take this moment to emphasize this disclaimer because it is very important. So everything we discuss here in today's session is educational purposes only. It is not in any form of investment advice. It's not financial advice. It's definitely not a signals group. Okay, I'm not here to tell you exactly when to buy or sell or to hand you a list of trades to copy. Okay, that's not what this is about. Okay, instead, the goal of this webinar is learning. Okay, it's to give you framework, tools, and insights that you can take away to apply in your own trading. Every trader is different. That's why I say trading is a very personal journey. You have different risk tolerance, you have different time frames, you have different capital sizes. So the idea here is not to tell you what to do, but to equip you with the knowledge that helps you make your own informed decision. Okay, and let's be honest, trading is really very overwhelming. If those who say it's not, it is overwhelming because there's a lot of emotional aspect involved. So you're bombarded with information from social media, from news outlets, from random Telegram channels claiming to have the holy grail strategy. But here in this webinar, the purpose is different. Okay, the purpose is to slow down things, strip away the noise, and focus on principles that actually matter. So as we move forward, I encourage you to treat this as a learning space. Take notes, ask questions, and think critically about what I'm sharing. At the end of the day, the whole point of Vantage bringing these webinars to you guys is so that you guys as a trader have a place where you can grow, improve, and see the markets from a different perspective. So once again, reminder, this is education, not advice. What I share is based on my own experience and my own approach. You are fully in control of your own trades and your own journey. My role here is simply to share what has worked for me and what might work for you, so you can become more confident and more consistent in your trading. Okay, so all right, before we dive in, let me take a moment to introduce myself for those who don't already know me. I mean, there's definitely going to be people who don't know me because there's 1,000 of you in attendance today. Okay, my name is Cassandra. You can call me Cass. It's a little easier. It's a little less formal. I like to keep things friendly in these sessions. Okay, I am an investment analyst and a prop trader. That means that I analyze the charts every day. Well, not every day, but a lot. It's basically my job. If you are a civil engineer, okay, your 9 to 5 job is to go to site and look at structural things. If you're a mathematician, your 9 to 5 job is to look at mathematical stuff. Okay, I don't know what the mathematicians do, but anyways, I am an investment analyst. My job is basically to look at charts, Okay, this is literally my day job, to look at charts, to understand the charts, to study the charts, to back test, to manage risk, to test out strategies, to forecast. That's basically my job. Okay, so I do this a lot. Okay, on the analyst side, I am with a research firm called Everest Fortune Group, which has been recognized globally as the finalist for best forex and equity research for multiple years running. Okay, my role again is to deep dive and deep market research. Okay, from my macroeconomics analysis to technical price action. Okay, that is basically my job. So on the prop trading side, I am a funded trader. That means that I have taken tests where I have passed. This test, it's not that, I mean, in my opinion, it's not that hard, but it's not exactly very easy as well because not a lot of people pass. So the test requires me to do 10% profit within a month. It's much easier nowadays. I think too many people are failing the test, so they made it easier. But I've consistently done 10% profit within a month many times. It's not that hard for me because I take one trade a month, sorry, one trade a week. I aim to take one trade a week, and that one trade I aim for 1 to 3% risk to reward. That means I'm risking 1% to make 3%. So if I get 4 trades correct, I make 12% that month. If I get one trade wrong, I make 8% because you're making 9% profit and 1% loss, so then you get 8%. But minimally, it's 3%. Okay, there are times where I aim for 1 to 5. There are times where I aim for 1 to 6. So risk to reward is also very important to becoming a profitable trader. Okay, so the reason why I'm sharing all of this is not to brag, it's to give you guys confidence that the person that's helping you guys and sharing the information today is someone who does this for a living and I would consider myself a professional. Okay, so you can be assured that what we're discussing today comes from both research and real-world trading experience. My goal is to make sure you leave this session with insights that are practical, relevant, and applicable to your own trading journey. Okay, so our agenda for today, let's find that having a clear roadmap at the very beginning helps you stay focused. So today we're gonna do 5 major parts. The first one will be basics of support and resistance. I'm going to be done with all my slides within like 20 to 30 minutes. Today's topic is so simple. It is the basis of trading. It is the basis of technical analysis, but it is something you have to master. It's gonna be like so simple. You're just like, oh my gosh, I cannot believe I spent 1 hour on sitting here listening to this. But basically you have to, because it is so important. It is the foundation of trading. Okay, so we can't run before we walk, right? So this section is basically to break down what exactly support and resistance is, which is the fundamentals of trading. And then we're gonna go with how to identify support and resistance, and we're gonna do trading strategies using support and resistance. I'm just giving you some examples. There's gonna be way more, but I'm just throwing in some. And then common mistakes and how to avoid them. And then we're gonna do a quick Q&A session. And then I know for sure we're gonna have a lot more time left with today's session because of how simple today's topic is. Then I'm going to pull out the chart so that we can kind of do like a practice session on the charts on how to identify support and resistance. Okay, so the basis of support and resistance, let's begin with support. Okay, support is the green line that I have in this photo. Okay, support is the price level where demand is greater than supply. In other words, it's a zone where buyers step in strongly enough to prevent the market from falling further. Think of support as like a floor. So think of yourself standing in a room and the floor is your support level. Okay, so if you drop a ball on the floor, it bounces. In the same way, when the price hits a support level, it tends to bounce up. But here's the interesting part. Support isn't just a lines on a chart. It's about psychology. It's about traders' behavior. Why does price stop falling at a certain level? Because participants remember those levels. Okay, they might have bought there before, they might have seen value at that price, or maybe institutions have pending orders waiting there. So the support is more than just technical concept. It's a reflection of human behavior where fear turns into greed and selling turns into buying. Okay, so let's move on with what resistance is. Let's flip the concept. If support is the floor, then resistance is the ceiling. Okay, resistance is the price level where supply outweighs demand. It's where sellers step in to cap the market from moving higher. Think of trying to jump in a room. No matter how high you jump, eventually you will hit a ceiling, the ceiling. Okay, so that's the resistance. Again, it's rooted in psychology. Why do sellers defend these levels? Sometimes it's because traders who bought lower want to take profit there. Sometimes it's because big institutions think the asset is overvalued at that level. And sometimes it's just because it's a round number. It could just be like 1.2 in EURUSD. It could be like 3,700 in Ethereum, okay? It just tends to attract a lot of attention when it's round numbers, okay? So resistance is not random. It's where human emotion and market logic intersects. It's where optimism turns into caution and buying turns into selling, okay? Okay, so now why do we use support and resistance and why does it matter so much? Okay, because they are the core building blocks of technical analysis. Okay, you can remove every indicator, every oscillator, every complicated system there is, and what remains is price. Okay, if you go on the charts right now and everything's just empty, just with your naked eye, you should be able to spot price movement. Okay, so what remains is price moving in between support and resistance. These are the levels that help us time our entries and exits. Imagine this, okay? Instead of randomly buying or selling in the middle of nowhere, you wait for price to reach a key support and resistance. Suddenly you're trading with logic and not luck, okay? They also provide risk reward framework. If you buy at support, you know exactly where to put your stop loss, right? If you buy, let me pull up my laser pointer, okay? If you buy at support, which is right here, you know exactly where to put your support, your stop loss. You just put it under this zone. You just put it under the stop loss zone. And if price were to come here and bounce, price were to come here and bounce, price were to come here and bounce, then your stop loss will just be under this zone. And when it bounces, it should avoid your stop loss. I mean, we don't talk about times where there are fake outs, right? We can't, fake outs are totally different. Fake outs is when price goes, hits your stop loss, but ends up reversing anyways. Those are totally different. That's a topic for another day where you learn to avoid fake outs, okay? But basically, anytime price comes to a support or resistance, it tends to reverse and it tends to bounce in those areas, okay? So if you buy at support, you know where to put your stop loss just below the support. If you sell at resistance, you know where to put your stop loss just above the resistance. So this clarity is what keeps you disciplined and prevents your account from bleeding due to guesswork, okay? So if it kind of gives you a bit of structure. So if there's one thing you remember today, it's this: support and resistance is not optional, okay? You cannot choose to not learn support and resistance. You cannot choose to not master support and resistance. They are the foundation. Every serious trader uses them, whether they admit it or not. I don't know a single person who does not use support and resistance in technical analysis, okay? So let's go on with identifying support and resistance. We are already halfway through our webinar, all the slides today. So we're going to have a lot of time to do the Q&A session today. And we're going to have a lot of time doing, like, going onto TradingView and like analyzing, like practicing support and resistance. Okay, so now let's talk about identifying support and resistance. The most basic way is through horizontal levels. So this is horizontal. Basically, price is going sideways. You start by looking at the swing highs and the swing lows. If price has reversed from that level multiple times, that level deserves your attention. The more touches, the more significant it becomes. So round numbers like 1.2 or 150, okay, often acts as a magnet for price. Traders place orders there, institutions notice them, and they become natural levels of support and resistance. So the first tool in your toolbox is always the horizontal levels. They are simple, but they are incredibly powerful. By the way, guys, I take you guys every Tuesday. Can you guys let me know, for those who are here every Tuesday, have I done a live session with you guys? Like, have we gone onto the charts and done analysis together before? Can you guys let me know in the chat box? I want to know. Not yet. Okay. Thanks, Nina. Okay. Thanks, Andrew. Thank you. Just likes. Okay, cool. I mean, we're gonna have a bit of time today. Thank you, Giola. Thank you, Vidal. We're gonna have a lot of time today, so we can jump to TradingView later, and I'll show you guys how I usually do my analysis. Hopefully I have enough time. Okay, I definitely have enough time. I usually take 5 minutes to do my analysis. I do it every Monday, and then I wait for things to play out. Okay, so other ways that you can identify support and resistance is using, it's not just one line, okay? It can be other ways. You can also use a trend line. So let me pull out my pen. Okay, let's say I identify this trend. Okay, well, you know what? I shouldn't have put this in the slide. Okay, we'll pretend price is moving within this trend line. Okay, even if it's moving in an uptrend, or even though if it's moving in a downtrend, the trend line is still a form of support. Okay, it is still a form of support. Okay, so that support and resistance is not just horizontal, there's many ways. Okay, so it's not always flat, they can be dynamic. Moving averages, for example, which is what I placed here, often acts as a support in uptrend and resistance in downtrend. Price tends to respect the 50 and the 200 period EMA. Trend lines are also the other one, and also channels, okay, which I will show you guys later when we go into the charts. But basically, when price touches here, can you see in this part here? It's a resistance and price tends to reverse, okay? Because this moving average tends to work as a form of support and resistance. So it's not just, I mean, it's not just moving average, it's not just trend lines, there's like a lot of things. There's also like indicators can also work as support and resistance. You can use RSI, you can use stochastics, you can use Ichimoku cloud. There's so many ways to look for support and resistance on the chart, not just horizontally. Obviously, when I give ranking to which is the priority, support and resistance in terms of horizontal levels is always the strongest level. Okay, so if I have to prioritize whether I'm looking at horizontal levels or trend lines or moving average or indicators, I'm always going to put horizontal levels as my priority first, as my main decision maker, and then the rest will just be supporting, okay? Okay, so a critical concept, support and resistance are zones, not lines. To many beginners, they draw a razor thin line, okay? I used to do that. I used to do that for years, actually. I do that for years and expect price to respect it perfectly. But markets are never that clean, okay? Price may poke through, wick above and below, okay, then reverse. So by treating support and resistance as area or zones, you reduce frustration from false breakouts. It's not about perfection, it's about zones where the balance between buyers and sellers shifts. Okay, the mindsets shift alone can drastically improve how you trade support and resistance. Okay, so the next will be trading strategies using support and resistance. Most common strategy is the bounce strategy. Basically, anytime price comes to a support zone, you get in for a buy. Okay, when it reaches a resistance, you get in for a sell. It's basically a bounce and a reverse zone, okay? But it's not as simple as that, okay? So this is how I usually see it. When I identify support and resistance or zones on the charts, my aim is to narrow down the location of where I think the action is going to happen. Okay, so just imagine two countries going to war. Okay, so this is like country A and this is country B. So they are both marching towards each other, and then this is the zone where they meet. Okay, so support and resistance is basically the zone of where the action is going to happen. So when A and B reach here, that's where they're going to fight. It's really the same concept as trading, because when the buyers and the sellers meet at a zone, then they will fight to see who wins. If the buyers win, then price is going to go up. If the sellers win, then price is going to go down. It's as simple as that. Okay, so your job as a trader is to identify those key zones, because that's going to be where the action is going to happen. Later on, you can like add in things to narrow down where exactly in the zone the action is going to happen. Okay, so let's say I've already identified my zone, but that zone can be really huge, right? It can be like 1.3, 1.2, 1.1. So where do I get in? Do I get in at 1.1? Do I get in at 1.2, 1.3? That's why you pull out other things like candlesticks. You pull out other things like indicators, like Fibonacci levels, like yada, yada, yada. You add in supporting technical analysis tools to narrow down where your entry is going to be. That's why for me, there's a lot of time I can pinpoint razor sharp, like really good entries, like where price reverses at the dot, because I'm combining so many things to like help me get a really good entry. Okay, so don't just buy at a single price point. Narrow down your zone first, narrow down your location first, and then later on use things to find exactly where the action is going to happen. Okay, let me move on. Okay, the breakout strategy. Instead of waiting for the bounce, you can enter while price finally breaks through a strong level, but not all breakouts are created equal. There's also gonna be like fake outs once in a while. That's why you need to, I mean, that's a totally different topic. Okay, fake outs. There's I can do a topic one day on how to avoid fake outs, but yeah, there's gonna be fake outs sometimes. That's why I personally don't really like to play the breakouts, because I feel like, I don't know if I'm unlucky, but a lot of times when I try to play the breakout, I end up catching a fake out. Okay, I don't know if that's my luck, but it happens to me a lot. So for me, I just totally avoid breakouts. But yeah, if you're someone who can master breakouts, this is another way you can use support and resistance. Okay, this is what I'm talking about by combining different things. Okay, so once you have found your area, your location of where the action is going to happen, now you can combine things. So the example that I've placed here is candlesticks, and then the next one I've placed here is a trend line. Okay, so you're just combining. So you can see how when like the trend line meets that zone, you can see how there was a super strong rejection happening here, okay? Because there's confluence happening. Confluence means that many things are pointing to the same location. Many things are pointing to the same area, so it makes it very highly likely to happen. Okay, so I'll give you guys an example to that. Okay, I think I say this a lot in my webinars, but basically you don't know if you want to buy this dress is pink, so then you ask your mom's saying like, yes, you should buy that dress, the dress looks good on you. You ask your dad say, yes, it looks good. You ask your brother. You're basically collecting data to help you make your decision whether you should buy the dress or not. So you're collecting data to decide whether this is where you're going to enter for the buy or the sell. Okay, so a very common mistake is drawing too many levels. I've seen charts that look like spider webs. Okay, it's crazy, lines everywhere. It doesn't help anybody. It just confuses you, because you guys have never seen how I've done my analysis. My charts are super clean. Anytime there's a little bit of mess, I delete it, because I cannot stand the mess. It just clutters my train of thoughts. So the solution is to keep your charts clean, only mark the most significant levels, those that price has reached on to multiple times. Less is more, clarity beats clutter every single time, and also use the most recent ones. Okay. Hey, let's spend a bit of time to another really important mistake that I see all the time when it comes to support and resistance. It is forcing biases. Okay, forcing biases. Now that what I mean by forcing bias, well, there's a lot of traders that actually don't actually draw their support and resistance level objectively. That's one thing. Instead, they adjust their lines to match the place that they want to see. That's one. And another thing is they um they combine things that doesn't really make sense. So let's say you see a head and shoulders on the charts. Okay, you see a head and shoulders on the charts. Even though support and resistance, okay, the swing highs and swing lows are telling you it's not working out, it's not really a sell. You keep forcing your bias to tell yourself it's a sell just because you saw the support and resistance. Anytime you do an analysis, okay, remember to give priority to certain things. Certain things, support resistance should always be the thing that you give priority to, especially horizontal support and resistance should always have priority amongst everything else. Okay, it's the same example. If I'm buying a pink dress, do you think I will take my mom's opinion more heavily compared to my dad. My dad is someone who uses the same black t-shirt 10 times a week. Okay, for example, okay, he's not really someone who cares about fashion. He's not really someone who knows a lot about fashion. But my mom, she's always in like different clothing, different styles. She's like in high heels. She's always dressed up. If I want to buy a pink dress, obviously, if I ask my mom and I ask my dad, and my mom, they both say yes, or my mom says yes and my dad says no, obviously I'm going to listen to my mom because my mom is the one that has a better sense of fashion. Okay, so there's always also priority in opinions. Okay, there's also priority in the data that you collect. So support and resistance, especially horizontal levels, will always have priority when it comes to your analysis. Other things like chart patterns, indicators, all these are supporting. It is good if they agree with your analysis, but you shouldn't take their data first over support and resistance. Okay, so then another thing is also ignoring context. Okay, let's spend a bit of time on this as well. Let's start with this. A level doesn't have the same strength across all time frames. Okay, the higher time frame will always have a stronger time frame. So a support level you've marked on the 15-minute chart might look super clean and super good, but it might bounce a few times. But if you zoom out to the daily chart, it might just be noise. Okay, so on the flip side, a level on the daily chart might look rock solid, but when you drop down to the 5 minutes, you see dozens of small ups and downs inside it. Okay, so this is why so many traders get frustrated. Okay, they say, okay, but Cass, I drew the support here on my 5 minutes chart and it broke right through. I thought support was supposed to hold. Well, yes and no. Okay, well, yes and no. Okay, so it's if support on the 5 minutes, but maybe on the higher time frame, the overall trend is bearish. Okay, and that level is just a small bump in the road. Without context, you're trading blindly and you're actually trading against the trend. That's why when we go to TradingView, I will show you exactly how I do my analysis every time I do my analysis, this is the exact style I do my analysis. You need to check different time frames. You need to check context. Okay, so another thing that people take out of context is, let's say right now I see again a head and shoulder. A head and shoulder is appearing, but it's appearing randomly in the middle of nowhere. Okay, or maybe a reversal candle, like a pin bar. It's just appearing randomly in the middle of the charts out of nowhere. It's not at a support, it's not at a resistance, it's just appearing randomly in the middle for no reasons. And you see this pin bar and you're just like, hey, a pin bar is a reversal signal. I should get in for a buy or a sell here. I should get in for a buy here, okay? Because the pin bar, when I see a pin bar, it means that it's a reversal. No. Okay, you're taking it out of context because a pin bar in the middle of nowhere, it's not as strong as a pin bar that is forming at a support and a resistance level. Okay, so it's also being biased. It's just like, it's almost as if you're trying to get in a trade just because you want to get in a trade. Okay, so context does matter and you do need to combine it with different things before you can make a decision. Okay, so that's it. That's a Q&A. I don't know if you guys have any questions. Okay, there's someone who's asking, how many support resistance levels should I draw on my chart? Okay, that's a very good question. I usually keep it to the most obvious 2 or 3 above and below the current price. If you start drawing 10 or 15 lines, your charts will become very confusing and you'll hesitate. Okay, clean charts will give you clearer decisions. Okay. Okay, another question. Should I take every bounce at support and resistance then if it's supposed to be reversing? Okay, not necessarily. Not every time price comes to a support and not every time price comes to a resistance is a trade. If you want confirmation, you need a strong rejection candle, a reversal pattern, a momentum shifting in your favor. You also need other things like Fibonacci levels, indicators. That's why you combine things to give you. Like I said, if you are buying a pink dress, you don't just ask you don't just ask one person's opinion. Let's say you ask your mom and your mom says yes. But maybe if you ask your sister will give you a different opinion. Your sister will be like, yeah, I think the dress looks nice, but I don't think the pink is nice on your skin tone. Okay, so you pull out different things to help you make a decision so you don't get in every single time unless everything is telling you to get in. Okay, sometimes it's better to let one or two touches go and wait for a clearer setup than to force it. Okay, so let me pull up trading view. Give me a moment, guys. How do I give me like a minute to close out? Okay, there you go. Yes, that green box I've highlighted is a support and resistance zone. Okay, let me delete everything. Let me clear out everything. So every time I come on the charts, let's do EUR/USD because structurally, EUR/USD is very clean. I love EUR/USD. It price action works really. Oh, look at this. I don't know when this was done, but um I did this on the 31st of August. I mean, sorry, 31st of July, but obviously I don't know if I got into this trade so long ago. Because this, yeah. Sorry, let me pull up Vantage. Does Vantage have, yeah, there you go, Vantage, EUR/USD. Anyways, let's go back to that example. Okay, so this example is a very good example of applying support and resistance with trend line. So you can see here, this is the support and resistance that I have identified, okay? Why did I choose this area? Because price came here one time, two times, three times if you count this. It didn't touch, I know, but then again, it's a zone, right? If I pull down the zone, then it will touch. Four times, five times, six times, seven times. Seven times price came here. So this is definitely, this green box is definitely a zone you want to look out for. On top of that, the ascending trend line is aligning here. So this will be the perfect place to enter for your buy, where the trend line meets the horizontal level. And true enough, price came here, respected this trend line, continue to respect this trend line, and continue to move up, hitting my take profit. Obviously, I don't know if I got into this trade or not, because I don't remember this analysis, but I know I did this analysis because this is my account. But yeah. Okay, so whenever you guys are pulling out a charts, choose Vantage, because this is the broker that you're using. You choose Vantage so that it aligns with your spread. Okay, so give me a moment. I need to pull out something really important since you guys have never seen my analysis. I want to pull this out so you guys know how I usually trade. Oh no, I don't have it here. Oh no. Okay, this is not on this computer, I guess. Okay, wait, give me a moment. Please, please. If it's here, that would be great. If it's not. Okay, sorry. I don't have it in this computer. I didn't plan to show you guys my trading style today, so just bear with me. I have to base this on memory. So the first thing I do is always to ask myself a few things. I always ask myself questions because you ask yourself questions, then you will get the answers to those questions. Okay, so the first thing I will ask myself is, what is the current trend? Followed by, do I buy or sell? Followed by, where do I buy or sell? Okay, so to answer this question, I'm going to put this very closely. This is so important. Every time I trade, I ask myself this question. So what is the current trend? When I mean current trend, I mean is price going up or down? So can you guys let me know in the chat box? Let's do this together so you guys know what I'm trying, my train of thoughts. When you guys look at the chat, when you guys look at the charts on the daily charts, do you think price is going up or down? Thank you, Christopher. Thank you, Brian. Thank you, Grace. Thank you, Gula. Thank you, Vidal. Thank you, Rick. Okay, price is going up. So I've answered my first question. So then the answer to my first question will then help me answer the second question. If price is moving up, I want to get in for a buy. If price is moving down, I want to get in for a sell. It is as simple as that. So by knowing where price is moving, I would have won 50% of the battle. Okay, I already won 50% of the battle. Thank you, Chris. Okay, because now I know if I'm going in for a buy or a sell. Okay, why do I get in for a buy when it's going up? Because just imagine yourself jumping into the ocean. You don't want to go against the wave. You want to be following the current. Look, if I get in here for a buy, price will push me to my take profit. If I get in here for sell, I can get in here for sell, but I'm going against trend and it's going to be a short one, right? So why don't I just play the entire upwards move rather than playing the sell? Okay, it is dangerous to go against trend. Therefore, I am a trend trader, but this is just, again, my style of trading. It is not every trader's style of trading. Every trader have a different style of trading. I am merely sharing my style of trading and I am a trend trader. I'm never a counter trend trader. I never, ever, ever go against trend. Okay, so now that I know that price is going up, I want to mark out that upwards movement. I'm going to reference two charts. First is the daily and then the 4 hours. Why? Because I need two charts to tell me that it's up for me to go in for a buy. I need multi-time frame confirmation. Can even use the weekly. Okay, the weekly is also showing up. So yeah, it's clean. Daily showing an up, and then I need the 4 hours to also show me up, and then I will be very happy to get in for a buy. Okay. Okay, so now that I've identified that it's an up, I now pull out either my trend line or a channel. So a trend line would require 3 touches for it to be a textbook valid trend line. So 1, 2, 3, 4 touches. So this is a valid trend line. Or if you can see a channel, you can also use a channel. So a channel is here, parallel channel. Why am I highlighting this? Because I am narrowing down where the action is going to go. So if I can identify this channel, I kind of have a rough idea where price is going to go. So basically, price is going to keep moving within this channel, right? Because I've already identified this channel. So it's expected that price is going to continue moving within this channel. So if I've already narrowed down, remember, it's like two countries going to war. The first country is the buyers and the second country is the sellers. They are moving towards each other until they reach a zone, and then they start fighting to see who wins. If the sellers win, then price will go down. If the buyers win, price will go up. So I've already narrowed down where the action is going to happen. The action is going to happen somewhere within this channel. Okay, so now I need to keep narrowing down the zone, keep narrowing down until I found the exact spot where the action is going to happen. And that's where I get in for my buy or my sell. But obviously I'm going to get in for my buy because I already know that I'm going in for a buy because of the bias. So then I will take a note, why buy? So that next time when I come back and see, I know, okay, uptrend on weekly, daily, and the H4. Okay, my next question. Where do I get in for the buy? Where do I buy or sell? So now I pull out my horizontal level. So again, price is always a zone. Okay, it is not one line. It is not one line. Okay, it is a zone. I used to do my analysis based on this one line. Okay, so now I stop using this one line and now I use a zone. I always use a box now to draw my zone. How do I pull up my zone? I need to see where current price is right now. Okay, so current price is here. I need to identify the nearest swing high and the nearest swing low. Those are going to be my horizontal zones. Okay, how do I do that? I'm gonna pull up my zony. There you go, rectangles. And I'm just gonna highlight. I'm just taking from the highest point to the body of this candle, okay? Similarly, for the support, I'm taking from the body to the wick. The body to the wick. Okay, and then I'm going to pull to see if it connects to anything. For the top, it doesn't connect to anything. There's nothing up there to connect to. So I'm pulling to the highest point of the wick and the closest body that is to that wick. So this is the closest body, and this is the highest point of that wick. Okay, I'm going to pull to see if it connects to anything. Okay, it connects to quite a lot of things, and I'm just pulling it to the highest point of that wick. I guess I can pull it to here, right? But that's a bit too much. So I'm gonna do this. Okay, gonna do this. I think that's reasonable. Okay, so this is going to be my zone. Okay, I guess, I mean, if we want to take this into consideration, this was more like a fake out, right? This was a fake out. You can also pull it up to this area here. Okay, you can also pull it up to this swing high here, then you have a really narrow zone. Okay, so now I already narrowed down my swing high, my swing low, and my trend line. So I now have a narrowed down area of where I think the action is going to happen. So the action is going to happen either here or here. Okay. This is where the action is going to happen. Or here. Okay, so if price pulls back to either one of that area, I am going to enter for a buy. So I mean, obviously, it looks like price pulled back and touched this area already, and then it could possibly just keep moving up. Hopefully, that's not the case. Okay, so now what do? I pull out other things to make my confirmation. Okay, to get my confirmation. So if you guys can let me know in the chat box if you see any chart patterns. Let me know. Do you see head and shoulder? Do you see teacup? Do you see double top, double bottom? No, nothing. Then we move on. Okay, because I have a cheat sheet that I use. I just don't have it on this computer. Let me, just let me try like cheat sheet. Oh, I might have it actually. Give me a moment, guys. There you go. I have it. Okay, give me a moment, guys. I need to take a photo of this cheat sheet so I can show you. Save picture. This is the cheat sheet that I use. What in the world? I just saved it. Where did it go? I need to pull this out so that you guys know what I'm talking about and you're not confused. Where is the cheat sheet that I just saved? Save this picture. Okay, under downloads. Cheat sheet. Okay, there you go. This is the cheat sheet that I use, okay? So I first identify whether there is a trend line, a channel by then I use horizontal levels to narrow down, identifying pullbacks, overlaps, significant swing highs and swing lows. Then my next question is, are there any chart patterns? So I ask myself, do I see any chart patterns, double top, head and shoulder, whatever it is. And then I use if there's any golden or death crosses. So I pull out the SMA to identify. Okay, then the next thing I do is, are there any natural moving average? Okay, I don't really use this. It's just here as a reference if I want to use it. Then I use stochastics and RSI. Okay, for stochastics and RSI, I'm doing two things. One is to identify support and resistance levels to look for bounce and reactions. And the next thing is to look for divergence. And then I look for correlations. So correlations is combining, for example, if you're trading the Canadian dollars, you want to also look at the price of oil. Why? Because Canada is a very strong producer, is a very big producer of oil. Okay, that country produces a lot of oil. So usually if the price of oil goes up, the price of the Canadian dollars also goes up. Okay, so it's correlated in that way. Similarly, the Australian dollars and the New Zealand dollars is the same. If the New Zealand dollars goes up, usually Australian dollars also follow suit because they are quite correlated in some ways. Other things is using, if we are trading EUR USD, you want to check DXY. DXY is the dollar index, the US dollar index. And then we decide if I want to get in for a reversal or a breakout. And also I will combine Fibonacci levels. Okay, so this is the cheat sheet that I use to do my analysis. So I don't see any chart patterns. I'm gonna not move on. Okay, so the next thing now I want to pull out is, again, SMA. Okay, you know what? I don't want to use SMA for this because today's topic is support and resistance. Let's try. Okay, you know what? Actually, I'm gonna pull out SMA. I'm gonna pull out two in two different settings. So the first one is the 50 moving average. And the second one will be the 200 moving average. And then we'll see if it acts as a support and resistance. Okay, so it's not working very well because you can see that the 200 is down here, but price is clearly respecting this trend line. So the 200 is not really giving us very accurate information. And the 50, I guess the 50 is kind of working, but if we adjust it a little bit more, let's try 70, then, oh, okay. 100 is accurate in this example. Thank you. By the way, you cannot use a fixed number for every chart, okay? It's not gonna work. Okay, so thank you so much, Nina. So the 100, I'm gonna pull out my example just now. Where is it? Where is that? Okay, there you go. Okay. So a natural moving average is when you edit the settings. You edit the settings so that it flows naturally with the chart. So you can see just now when I pulled out 50 and 100 and it didn't work. That's why we adjusted the settings to 100. Nina was saying that 100 works. But you see, look for at least 3 clear bounces and reaction for it to be valid. Okay, I only see 2, so maybe we can adjust the settings again. Okay, so there's only 1 and 2. Maybe we can try to adjust the settings again to see if we can get 3 touches for it to be a bit more accurate. Let's try 120. No. I need this part to move, this part here, but it's not really moving. So, okay, you know what? Let's just stick with the 100. I'm happy with the 100. It's only 2 touches. The best if there's 3 touches. But yeah, we try to follow the guidelines as close as possible, but you know, sometimes you just can't. Okay, so you can see how price came here and respected the moving average very well, and hopefully it continues to respect that moving average. Okay, so moving average has not formed, but basically we've already narrowed down where we think price is going to go. I'm going to pull out stochastics. I might not be able to pull out for stochastics. Okay, so the settings I usually use for stochastics is 21, 5, and 3. Because it's smoother. How do I use stochastics to identify support and resistance? So okay, you can see here, there is a resistance. And you can see here, this is a support. Okay, there's the fake out there. But anyways, you can see when price reverses here, on the charts, it reverses as well. Here, when price reverses, here on the charts, it reverses as well. When price reverses here on the charts, it reverses as well. So every time it reached these resistance levels on stochastics, you see that there's a reaction. Similarly, for this support zone, there's all that reaction happening every time on stochastics price touches this level. Okay, I don't like this part because there was a fake out. So maybe we can get rid of stochastics and try RSI instead. Let's see, hopefully RSI respected that area more. Okay, I have too many things on, sorry guys. I'm on the free account, by the way, that's why. For RSI, I just stick with whatever is there. Okay, RSI is respecting way better. Okay, RSI is respecting that support levels way better. Okay, so you can see here, every time price reversed here, it also reversed on stock RSI. Reversed here, it also reversed here. This is the only part where it wasn't accurate. Okay, and then now it reversed here, and now price. So with RSI, if price were to come here again one more time, I would expect a reversal to happen. So I'm gonna keep RSI. RSI is a good reference to keep. It's a good supporting indicator to use because it seems to be working quite well. Okay, it seems to be working quite well. So the next time price moves and RSI reaches here, I will be getting ready to get in for a buy. Okay, I'll be getting ready to get in for a buy. Okay, similarly, if price were to pull back somewhere within this green box, I will be getting ready to get in for a buy. Okay, so that's exactly how you would use support and resistance to get your analysis. Okay, and that's how you combine other things to get your analysis. Okay, so right now, things that we have that will help us with our analysis and to get in for a buy is number one, the moving average. Number two is this horizontal green box. Number three is this trend line. So you don't expect to put your entry here, right? Buy entry, okay? You're not going to put your entry here. Why? Because it's below the green box and it's outside of the channel. So you want to put your entry somewhere within this green box and somewhere within this channel. That means I'm going to get in somewhere here. I am going to get in somewhere here. Okay, this is going to be where my entry is going to be, somewhere along this line. Okay, so when price pulls back, the other thing that you can use to confirm your entry is by combining reversal pattern candlesticks. Okay, I cannot remember all of it. That's why you use Google. That's why Google is here. Okay, you use Google. If you see a reversal pattern candlesticks forming here, that is another confirmation to get in. Okay, on top of that, other things that I would use is actually Fibonacci 61.8. Yep, lining up exactly at the 61.8. So where I place my buy entry is actually looking pretty good, if I do say so myself. Okay, so that's exactly how I would narrow down my location to get in for a buy. That's exactly how I would decide, okay, how I get in. Okay, so the first thing I ask myself, what is the current trend? So we've already decided it's a buy. So because it's a buy, it is an uptrend. Because it's going up, I am going to decide to get in for a buy because I want to follow trend. I am a trend trader. So where do I get in for a buy? I've already narrowed down where to get in for a buy. It's going to be somewhere within this green box, within this trend line, within this channel, and also within the moving average. And also it would help if when price gets there, RSI is also touching the support. Okay, this will be all the confirmation you need, and this will give you a very high probability setups. Okay, so just an example, this is not a real setup. Okay, this is not a signals guide. Don't get me in trouble. Okay, don't get in and then you lose money, and then next week you tell me, oh, you told me to get in and then I lost money. No. Okay, I'm giving you an example. Okay, so this is an example of how I would do it. I will put my buy entry here, which is somewhere within this green box. If price pulls back here and price pulls back here and everything is aligning, I will get in here, and there's reversal candlestick, I'll get in here. Okay, so my buy entry is here. My stop loss is going to be here. So I'm putting my stop loss right below the trend line. The best place is to put it under the green box and below the trend line. But I like to keep my stop loss tight. The problem with having a tight stop loss is that you might get wicked out prematurely. Okay, so a safer stop loss is here, but I like it just below the channel. Obviously, the safer one is below the green box as well. Okay, then my take profit is going to be here, the last swing high. Okay, so then I will now have a nice, it looks like a 1 to 2 risk to reward, 1 to 2.5 risk to reward. So if my entry is here, my stop loss is here. Okay, I'm just going to put it right below the green box, very, very tight. and my take profit here, you have a 1 to 2.2 risk to reward. Obviously, my style of trading, I'll do this. And I have a 1 to 4. Okay, 1 to 4 meaning that if I have $100,000 account, I risk $1,000 to make $4,000. If I lose this trade, I lose $1,000. If I win this trade, I win $4,400. Okay, so that's all I have for you guys today. I hope you guys learned something. I will see you guys next Tuesday. Give me a sec. Yeah, I'll see you guys next Tuesday. And yeah, I hope you guys learned something. Okay, take care, everyone. See you in a week. Okay, bye guys. Thanks, Chris. Thanks, Nina. Thanks, Gila. Thanks, Christopher. Thanks, Ryan. Thanks, Joash. Thanks, Vidal. Thanks, Muhammad. Have a buy at 1 point. Yep, you can. That's a good location, Nina. That's a good location. But obviously, please don't take this as a signal, guys. I'm telling you right now, I'm gonna remind you again, do not take this as a signal. This was just an example. An example, okay? This is a very tight stop loss. Don't follow my stop loss, okay? This is just an example. I don't want to get in trouble. Okay, bye, Nina. Okay, bye, Nina. Bye, Gemma. Bye, everyone. Thanks for attending. See you guys in a week.